What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and today we're going to be going over AMC stock and a great options strategy to turn $3 into $100 by the end of this week. So this is going to be an advanced option strategy, and if you aren't familiar with multi-leg option strategies, I highly recommend staying away from it because it can be pretty dangerous if you don't know what you're doing. So this is going to be an option strategy that is ideal for a flat stock. And AMC has been relatively flat over the past month, so we can safely assume that AMC is a good candidate for this strategy. But of course, it is kind of risky since AMC could pop at any moment, but you're only going to be risking $3, which is not a lot of money, and it's great for people with small accounts. So we're going to be heading over to the options chain and set it up for what we're talking about. So we're going to be buying the $53 strike call. We're going to be selling the 52 strike call. And then we're going to be buying the $51 strike puts. And then we're going to be selling the 52 strike puts. So as we can see here, make sure your iron, this is called an iron butterfly. Make sure your iron butterfly is set up like this. You want the $53 call to be a buy, $51 put to be a buy, and then the $52 strike is going to contain both your sell puts and your sell calls. So make sure it's set up like this, and your total credit is going to be $97. So you're only going to be risking $3 for this strategy because you're going to have to put down a collateral of $100, and then you receive $97 back, making your max loss only $3. So this strategy is pretty good for small accounts, and it can yield a pretty good return if you win on the trade. So we're going to click continue, and we're going to see that the collateral is going to be equal to 100. So let's set it up. We're going to enter 1 for our contract. And of course, if you have a huge account, you can sell multiple contracts, of course, to amplify your returns. So we're going to set the low limit price to $97 as we saw earlier. And it is going to expire on July 9th. So it's only going to be around 4 days of days to expiry. So it's going to be a fast moving options strategy. So as we can see here, minimum credit $97, collateral you have to put down is $100. Max risk is going to be $3. So we're risking $3 to make $97 and turning it into $100 effectively, which is a very interesting option strategy. How do we win on this trade? Well, it's hard to visualize, but we're going to use an options calculator right here so we can visualize it easily. So we want AMC to stay between $51.03 and $52.97. If it stays between that range, you're going to be making profit. Your max profit is going to be $97, and it has to hit $52 exactly on Friday. If it happens, you're going to make your full profit of $97, and you're going to be turning your $3 into $100. As you can see here, max loss $3, only $3. You're only risking $3, so it's a pretty you're not really going to lose that much money. So if you have a big account, throw in one of these iron butterflies. If you lose $3, it's no big deal. Max profit, as we can see here, $97. This is an amazing strategy, and you can get a huge amount of return on your money if it plays out right. Of course, if it doesn't hit $52, you can still make profit as long as it stays between this range. So you have around a $2 range. $51.03 and $52.97 are going to be your break-even points. Anything in between, as long as AMC stays between that, you're going to be making some profit. But make sure you close the contracts before expiration, just because it's very risky to let spreads, which this is a 4-leg option strategy. So if it expires, it's going to be pretty risky if it goes in between your strike prices, because you will be assigned shares potentially, and it's just a lot safer to close out your Iron Butterfly before expiration. So you'll still make profit if you see profit. Like if you're up 80% on your contracts, you can close it out for a profit. Don't be afraid to close it. And since this is an Iron Butterfly, it's going to be selling to open. So the same way to close it, it's going to be buying to close. So for example, we're receiving $97 of credit. If the contracts are all worth around $50, you're going to be making about $47 of profit by buying these contracts back for only $50. So that's how you're going to be profiting off it. This is a pretty safe strategy. You're not risking that much money, and I highly recommend it if you are looking for a cheap small account options play on AMC stock. We will be going over more option strategies like this on different stocks as well, but right now AMC looks like a prime candidate for the strategy, and I highly recommend it if you're looking for a really good risk reward ratio options strategy. But that's about it for this video. If you have any questions, leave them below. Like the video if you enjoyed it, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.